Franklin India Short-Term Income Plan. Debt funds or fixed income funds, as they are also known as, are considered to be less volatile as compared to equity funds. Typically, debt funds are considered less risky as the underlying investments have limited risk. Most debt funds primarily aim to generate regular income, while some may aim to generate capital appreciation as well. They could be seen as alternatives to traditional fixed income savings or investment options. Benefits of investing in debt funds. Some of the key benefits are potential for capital gains along with opportunity for regular income. Potential to outperform inflation over medium to long term. Liquidity and tax advantages. Relatively less volatile return profile may offer regular income. Transparent and well-regulated. Professionally managed. There are two ways in which debt funds generate returns. First, through interest income from the underlying securities in the fund portfolio. Typically, higher the credit risk, higher is the potential for interest income and vice versa. Credit risk is the probability of the principal and interest being paid on time. In other words, higher credit risk is aimed to be compensated by higher interest income. Second, through capital gains which arises due to change in prices of the underlying securities in the fund portfolio. Typically, prices rise when interest rates fall and vice versa. This is also known as interest rate risk. Debt funds may be classified on the basis of their indicative investment horizon and their investment strategy. According to SEBI's circular on scheme categorization, based on the indicative investment horizon, debt funds can be classified as overnight funds, liquid funds, ultra-short duration funds, low duration funds, and money market funds. These funds are suitable for investors who have idle money but for a very short investment horizon ranging from a few days to a few months. Then there are short duration and medium duration funds which invest in short and medium maturity debt securities. They are suitable for investors with an investment horizon of 1 to 4 years. Finally, there are medium and long duration funds which invest in debt securities with an investment horizon of 3 to 4 years and beyond 7 years respectively. The intermittent category of medium to long duration funds invest with a horizon of 4 to 7 years. Based on their investment styles or strategy, debt funds may be classified as high credit funds. These primarily invest in government securities, corporate bonds, and other fixed income instruments with a high credit rating of AA+ and above. The objective is to minimize the credit risk. Credit risk or managed credit funds primarily focus on corporate bonds with a credit rating of AA and below. These funds aim to generate higher interest income by investing in such instruments with a relatively higher credit risk. Debt funds can be positioned on the basis of a combination of credit risk and interest rate risk in their portfolios. The chart shows the positioning of various categories of debt funds with respect to credit risk and interest rate risk held in their portfolios. For example, a high credit liquid fund is typically positioned as a fund which carries a low credit risk and a low interest rate risk. Similarly, a managed credit medium-term fund is typically positioned as a fund with a higher credit risk and a higher interest rate risk. Let's look at the key benefits of investing in Franklin India Short-Term Income Plan. The fund aims to provide stable returns by investing in fixed income instruments. It invests primarily in short-term corporate bonds with a focus on higher interest income. Ideal investment horizon. Since the Franklin India Short-Term Income Plan is a debt fund with a low maturity profile, we recommend an investment horizon of 1 year or more. Every investment you make must ideally be linked to a financial goal, and this goal could be of varied durations depending upon your investment needs. This fund can be considered as an investment option if one seeks regular income and reasonable capital appreciation. Who should invest? This fund is best suited for those with a moderate risk profile with an investment horizon of at least 1 year looking for steady returns. Investing in this fund could be a good alternative to investing in short-term savings instruments. Let's take a look at the tax structure. Liquidity. You can redeem your investments in full or in part on any business day. The redemption amount is normally dispatched within 10 working days from the date of redemption. You could either receive this amount as direct credit into your bank account or as a physical check, which you can deposit into your bank account. Let's get to know some fund facts of the Franklin India Short-Term Income Plan. For more information, please feel free to contact your mutual fund distributor or registered mutual fund advisor or log on to www.franklintempletonindia.com. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.